I'm gonna get started here in a minute. I just gotta get the other screen ready. So you guys can see some transactions that I've made. I really haven't had a choice to, or not choice, I haven't had a chance to show you guys that because we're all looking for proof. Obviously, we need to see some proof that I'm actually making money. If my dogs are being reckless and overly excited, they are just been locked up. Not like locked up, but like they just are out here with me. So they may notice somebody outside and they may start barking. So be mindful of that and that noise if you hear that. But they're just looking out the window. They're just dogs. So important to read the risk disclaimer as always. Know that my opinions are not the excuse for you to push a button. So I'm not going to tell you to push a button. I'm not a financial advisor, so I can't tell you to buy it or sell it. You assume that risk on your own. So pause the video and look at that if you wish to again. E-mini S&P June delivery contract. I still think that I am a bit early because I still think that this week, once it's over, then the contract is expired. So I think that's coming up on the September one, but I forgot all about that stuff. But pretty sure it's the first week of June, then the second week then that's where it gets more liquid. In my opinion, the S&P is very liquid, so work towards that last week. It's not horrible. But, look at E-mini S&P the September contract, you can see like all these candles are kind of, there's just no liquidity in them. Versus if you look at the June contract, you can see that there's more volume and it's actually being traded. So I actually think I'm going to stick with this one just because it's more crystal clear. It's really helpful, in my opinion, to use this because you can actually see more trading. It's more beautiful. Let's just put it that way. So we have previous day's low. That's a very common thing. We got Monday. Draw that out. We get into Tuesday. Tuesday goes below Monday's low. Change in the state of delivery. Right above that short-term high right here. Shift market structure. And then we got our Tuesday trading. I'm looking for a classic Tuesday low of the week. This thing's moving around. I'm thinking that with the NASDAQ accelerating to the upside so hardcore, I think that there is a possibility that we could see the low of the week as of Tuesday. So today is classic low of the week, in my opinion. That's not a guarantee. Obviously, we can come down and take out this low, but I'm thinking with what I'm seeing right now that we may have made the low of the week today. I really didn't have much of a chance to take a transaction because I was at a dealership purchasing a vehicle and it just was very time consuming and distracting. So I personally was not able to react, or not react, but take a trade. I wasn't able to get involved with this movement. So this morning I woke up, I believe at 8:30. Got to the dealership around this time, about 10 a.m. Right when the silver bullet popped up, we had this shift market structure, return to the fair value gap right here. then you also have multiple pools of liquidity. So this is a 5-minute time frame. And then it went through that. I was utilizing this order block right here as a potential roadblock. I wasn't really expecting it to reach much and above beyond that. That was just like a temporary speed bump that I was expecting. So we ended up going up in there. We violated the mean threshold, and then in the afternoon we also had a nice movement upwards. Right here. So in here we have that change in the state of delivery above that short-term high. Leaves this gap open. The reason why it does that is because it's rebalanced this, and we have a change in the state of delivery. So it has no need to go down in here. So its target is these relatively equal highs. And then ultimately we did end up taking out the intraday high, which was no surprise to me. I was expecting that, but the low-hanging fruit was to get it up into this fair value gap right here. That's what I was looking for. And ultimately, we have received that price action. So that's all I'm going to cover. I want to take her over to Robinhood and actually show you some of these trades that I'm talking about. So we have Amazon here. So I was interested in this several weeks ago. I bought it for $76. So if you take that times 100, this controls 100 shares of the stock. So that's why it's $76 and not 76 cents. That's really important that you annotate that and take note on that. But this is a call option. So this basically means that I'm anticipating Amazon to reach 150 a share. And as you can see, we've already accelerated a good amount in Amazon. I bought this back on the 26th of April. Took a couple weeks to start moving in my favor, but definitely has panned out. I actually did end up averaging down on this. I accumulated more long positions, so originally I bought it for 105, and it went down and gave me a better price, so I bought another one at $47. No, I do not wish I bought more. I can imagine how many people are saying, "No, I wish I bought more." No, don't care. I bought what I bought, and I'm content with it. We've had since right here, right here. So I added it on this date, and then we did the lower movement into May and the 47, and then ultimately we've been moving to the upside. So call option, pretty simple. The only thing is it's subject to time decay, so if you guys don't know what time decay it is, you can YouTube it. It's just basically every day the option loses this much value. So you just times that by 100, so that's $2.7 is how much it loses. So tomorrow when this opens up again, it will lose $2. So that'll be worth $2.54. Now obviously that's subject to the stock opening down on the day, and then you can obviously lose more value in it if it closes down. So that's why you saw that it went down to $47. It's pretty simple to understand. It's just the only thing with these is you have to have a lot of time. So if you're betting on a movement that is supposed to accelerate to the upside, you cannot expect a move to pan out in 1 month and be okay with that, because you will lose your booty. You're gonna wreck yourself. So don't do that. Make sure you give yourself lots of time for this to pan out, and then you should be fine. So the only way to get around a time decay option and not be affected by that and still expect higher prices and not have to worry about that little catch that you have with call options, I mean, is you can open a call debit spread. So there's tutorials on Robinhood, how to use Robinhood. I'm not going to go over that, but a call debit spread is rather simple. It's just you don't get the profit potential. So that's that you don't want to go all the way out here. You want to go up into let's say September. Just go out like at least 3+ months. You'll be well off with that. So I think it's this way. So I don't even remember how you do it. Total cost. No, that's still buying. So I think you have to. I believe it's this way. Yeah. So right up here. So you buy a call right here at 150, and you sell a call right above the strike price. And obviously, if you think it's going to go higher than that, you can go with 117. And the more wider you do it, the more profit potential you can get. So if I were to click continue on this, it's going to cost me $60. But there's no time decay. So Amazon has to close above this strike price. So you click continue, and that's how much it costs. And as long as Amazon gets above all these prices, I think that's the correct way to explain it. I believe you can always use TD Ameritrade to backtest it and just fast forward it to know for sure. But basically, all you need is to right here. Okay. My bad. I forgot. I didn't know this down here. So this is really simplistic. So you're opening a call debit spread. Your collateral is going to be the spread between, so basically the strikes. So your strike is 155, and then you also have a strike of 150. So your strike is $500 wide. So that is your collateral. So you need to put up $500 worth of collateral. And ultimately, you're paying $55 to open this up. Now, if Amazon were to close above 155, if it closes above 150, 55, anything above that, you are good to go. There's no time decay. It just has to get up there. You have to be right about that. So if it does not reach 155 or 150, 55 by this expiration date, then you will lose everything that you put in this. So if you think that Amazon is going to reach 155 a share, that will reach your max profit. Once it gets there, you're good to go. And you make $445. So you risk $55 to make $445 by the end of your expiration date. In this case, that would be September 15th. I don't know if it has to reach that date. Don't quote me on that. But this is an option for you guys that don't have a lot of money to work with or income to work with. We're going to review the order, and I believe maybe you only have to have one. Well, I guess you only have to have $55. That's what it looks like. So you can open up whatever your brokerage allows. So I am taking this account, and I'm going to actually try to run her up to 6 figures or something like that. I am working on that. I mean, I'm taking profitable transactions and all that, but I personally think that this is a wonderful trade idea. This is not a permission for you to push a button and go in there and buy that. Because, like I said, I'm not a financial advisor. So, if you choose to do that, you have to take accountability. So, ultimately speaking, if you take $55, you can, in fact, turn it into $4.45. Just go back to the video and you will see that. And that's all it costs. This is for those of you that are more keen on the idea of limiting your risk and avoiding that time delay. This is for you guys. It's cheap. It's $55. If you don't have $55 laying around, I'm sorry, but you shouldn't be trading if you can't even afford to lose $55. So that's how a call debit spread works. I will cover in future videos how each of these spread setups work, like all kinds of spreads, just how to use them in details, and using the concepts themselves. But that's all I'm going to put on this one. If you found this helpful, like I said, just hit the like button. That way I know like you learned something. And if you don't hit the like button, God, I can't talk, man. If you don't hit the like button, it is what it is. I just like to see that. That way I know like you're learning and I'm helping you out. So I'm out of here. I got stuff to do. So enjoy the rest of your day and have a peaceful one.